Hi, this is Tony Hixon coming to you from Hixon Zuercher Capital Management with a special election update. We wanted to put up a quick video to our clients who might be feeling a little bit uneasy about the upcoming election next week. The truth is that the campaign season has been unnaturally correlated with swings in the market. This is evidenced by a couple weeks ago when the FBI reopened the case and re-looked at emails from Hillary Clinton's campaign. As soon as that news hit the headlines, within about 2 hours, the S&P 500 was down around 1%. You would have thought that NASA discovered a 10-mile wide meteor hurtling toward Earth. The S&P finished down just 0.3 for the day, but you can get a sense for how correlated swings in the market are with the news events that's revolving around these candidates. The fallout of that news event was obvious. Donald Trump is bad for the markets. From an investment standpoint, we simply don't care. There are other standpoints that you should care, but from an investment standpoint, we are not investing in these candidates. We are investing in companies that innovate, that provide goods and services that make our daily lives better. Companies that are undervalued, trading at value prices, growing their earnings, that are very durable no matter what the macroeconomic environment might be. There's always volatility around the election. That should be expected, but nonetheless, it may be making you feel a little bit uneasy. I'd remind you of what happened in this past summer with Brexit. After Britain decided to exit the European Union, the S&P 500 fell about 6% in the days that ensued, about 2 or 3 business days later. Well, within about 2 weeks, the market was trading at new highs. So volatility is always driven around news events, and that's to be expected. Bottom line, politics and investing simply don't mix. We've been telling our clients that for the past 9 months. It may be tempting to trade this market, but we beg you, please don't. The fact is our macroeconomic models suggest that the U.S. stock market is still attractively valued for investors. What we do know is that trying to time the market just doesn't work. It may be fun to tell your friends that you were able to get out at just the right time, but you never know when to get back in. Bottom line, trying to time the market goes against the grain of compounding wealth for the long term. Stockpiling cans of soup, building a bunker, following the media for a cataclysmic event that never occurs is never a good way to compound wealth for the long term. Stand your ground, hold the line, know that any pullback will provide you a better buying opportunity. However, we do understand that there are clients who just can't ride through this downturn. You might just not have the stomach for it or the risk tolerance, and if that's the case for you, please give your advisor a call and we can talk about taking a temporary defensive stance for your investments. Note the key word there is temporary. We always have to have an agreed upon time frame when to get back into the market. When you became a client of ours, you were given a retirement plan, and that plan has governed our decisions on how to invest your money. If we would change models, we want to make sure that we get back on track to what the overall plan for your retirement is. Any trade off that plan must be carefully scrutinized. What we are doing for you is starting today, we are holding cash. Any contributions to your accounts, any dividends that are being paid are not being reinvested currently until we see what happens with the events of next week's election. We don't plan to be on cash for a long time. We think this might just be an opportunistic time frame for us to wait and see how the election turns out. Bottom line, we know the upcoming election is creating jitters for some of you. Know that we care and that we're doing the best we can to navigate these markets in the meantime. If you'd like to discuss your portfolio or your strategy further, please contact your advisor at 419-425-2400 or email us. Thank you for tuning in, and we'll see you next time.